So, good evening. Welcome to the Hoperation Fund meeting for November. Today, I'm going to um, quickly introduce the Hoperation Fund and then talk about the Hoperation Fund portfolio update. Then, I will give my market analysis of the stock market right now, and our financial news reporters will present their reports. Finally, I will um, talk about the investment lectures for today, which will be about the Rule of 72, time value of stocks, and some fundamental analysis concepts. Okay, so the Hoperation Fund is a nonprofit organization with two missions to, number one, through receiving public donations and investing those donations, to donate investment profits to charities and nonprofit organizations dedicated to underserved areas such as education, children and women's welfare, STEM projects, environmental protection, and other areas. Second, we aim to fill educational gaps by teaching students and adults essential personal finance and investment skills that aren't taught in traditional schools. So we have four main operations: fundraising, investing, donating, and education. So moving on to talk about our investment portfolio. The return in October of the Hoperation Fund investment portfolio was 6.88%. In comparison, SPY had a return of 2.44% and QQQ had a return of 4.88%. So in October, I sold all my positions in SSO and the consumer sector and instead added shares of technology stocks. I also initiated a new position in QLD. So the total return of the Hoperation Fund since its beginning in June 2023 is 112.7%. So we have more than doubled our original portfolio amount. In comparison, SPY during that period of time had a return of 68% and QQQ had a return of 84%. So moving on to my market analysis, based on a long-term investment model of the Hoperation Fund, the midterm and long term is mostly bullish, with a little bit leaning towards neutral in the long-term market direction. The CNN Fear and Greed Index is 35, so that's right in the middle of the fear category. Mm, Currently, I would suggest having the majority of your position in stocks with a little bit in like cash and cash equivalents, bonds, and gold. However, I would be a little more careful because currently the market is still um, largely overvalued. The S&P 500 P ratio is 31.73 and the 10-year treasury yield is 4.083%. So I've said before, if you take the reciprocal of the 10-year treasury yield, you get a fair value of the S&P 500's like a fair PE ratio. So currently the reciprocal of the 10-year treasury yield is around 24, while the actual S&P 500 P ratio is 31.7. So the S&P 500 is still pretty like overvalued. However, though, I would like to note that November has historically been the best performing month. So as you can see from this graph here, November has the highest percentage of months in which SPY had a positive return. So this bar graph is from 2009 to 2025, and you can see in 88% of the months, SPY closed higher than it opened, so it had a positive profit. So more specifically, a specific stock that has had strong positive profits in November is Costco. So I have, as you can see, I have made many videos about the November seasonality of the Costco stock um, ever since like 4 years ago. And every year, Costco has had strong positive returns in November. And many investors have also noticed that too. So like strengthening the seasonality. Mm, As you can see from this bar graph, in all of the months in all of the Novembers from 2009 to 2025, Costco has had a positive profit. And this may be due to events such as like the holidays, like Halloween and Thanksgiving, and maybe like early Christmas presents in Costco. And this trend has also been noticed by many investors too. So this is just something to watch to like notice. If you don't have Costco already in your portfolio, maybe you would like to like look at it after this and maybe investigate it a little. Currently in the Hoperation Fund portfolio, we have not, we do not have Costco because of like limited funds. But in my own personal portfolio, I have bought Costco. And now let's move on to our financial news section for today. So last meeting, I think Arav, Sebastian, and Isabella um, volunteered to present like a short, few-minute news report on like recent financial events, maybe company analysis, etc. So, Arav, Sebastian, Isabella, would any of you guys like to go first? Okay, I think Arav raised his hand. So yeah, I'm excited to hear your report.
I'm sorry, I forgot to prepare a slide. But I did make a talk.
Okay, that's okay.
So I'm going to talk about the food stamps and how that'll affect the economy. So approximately 41.7 million people annually depend on the Supplemental Nutrition Assistance Program, also known as SNAP. This is 12.3% of United States residents. On a financial 2025 year, this number is reported over 42 million people. During the government shutdown, many people are unsure of to whether they will be getting food stamps during November of 2025. Courts have ordered the Trump administration to use emergency funds to pay for SNAP after the administration has stated that it lacked the legal authority to do so. President Trump stated that he instructed the lawyers to ask the court for appropriate legal action on how to legally fund SNAP as soon as possible. He expressed that it would be his honor to provide funding if legally permitted. Even with the court order, there will be likely a delay in United States citizens receiving their benefits as states in the USDA work to get the money distributed. On another note, in the past, the Trump administration has historically pursued policies aimed at reducing SNAP to help stop it. It's all due to the government shutdown. Refugees are among the first United States citizens to lose SNAP benefits due to the One Big Beautiful Bill Act, which has significantly reduced federal funding for the program. Trump has aimed to slow and some to even stop food stamps across the United States. This act signed into law by President Trump has led to a $170 billion reduction in the federal budget for SNAP through 2034. According to data worldwide, each dollar spent in SNAP makes about $1.50 in economic activity, supporting small businesses, grocery stores, and local economy. The suspension in SNAP benefits will lead to a reduction in purchasing power for low-income Americans, potentially causing a shift towards cheaper items and a decrease in spending on discretionary goods. This could all result in theft, which hurts the economy because businesses raise prices to help cover losses for theft. Theft can lead to business closures and layoffs, affecting employees and local economies. It can also disrupt shopping experiences, leading to reduced customer spending and economic growth. As the holidays approach, low-income Americans will not have the financial power to spend their money on the usual holiday items. Instead, they will be spending it on the necessities. This will have a ripple effect across America, putting millions of people into poverty. It will affect small businesses, and the United States economy will take a toll after all of this. Today, there are approximately 35.9 million people living in poverty. 42 million people living in the United States depend on SNAP. People are predicting that if SNAP does not continue, 39.3 million will be living in poverty. Some stocks and EFTs will be hurt more than others because of the SNAP cancellation policies. Walmart is the largest United States grocer and captures the highest share of SNAP spending, with over 94% of SNAP households shopping there annually and spending an average of $2,653 a year. This makes Walmart particularly sensitive to the lapse in SNAP benefits. Dollar General and Dollar Tree cater strongly to lower income consumers, with spending from SNAP accounting for mid-single digits of their sales. These realtors may see an immediate decline in traffic and a lower margin grocery sales if benefits are not disturbed. Kroger ranks second after Walmart for SNAP spending, with SNAP recipients contributing roughly 8.6% of the group's annual grocery purchase sale, making it sensitive to shifts in food assistance spending mechanisms. Costco takes the third spot, where SNAP cancellation will affect, and the annual spend of SNAP recipients is $1,482. Some of these companies have already taken a hit. Some ETFs that will take a hit are the SPDR S&P Retail ETF, the Consumer Staples Select Sector SPDR Fund ETF, the Consumer Discretionary Select Sector SPDR ETF, the iShares MSCI USA Minimum Volatility Factor ETF, and the Vanguard Utilities ETF. I recommend that you don't buy stocks or ETFs that could be affected by food stamps, and wait for the market about this to change.
Okay, thank you so much, Rob, for that really informative and detailed report about SNAP and the effect of different political events on the stock market. So that was really interesting. Thank you so much for sharing. So our two other financial news reporters are Sebastian and Isabella. Would any of you guys want? Okay, I think I see Sebastian's hand. So Sebastian, you can present your report.
The Fed on October 29, 2025, cut its benchmark federal funds rate by 0.25 percentage point, bringing it to a range of 3.75 to 4%. In its policy statement, the Fed noted that while economic activity has been expanding at a moderate pace, job gains have slowed and the unemployment rate has edged up, though it remains low. Inflation has moved up since earlier in the year and remains somewhat elevated. Fed Chair Jerome Powell emphasized that a further rate cut in December is not a foregone conclusion, signaling that the Fed will remain data dependent and monitor risks of a weakening labor market versus persistent inflation. Separately, the Fed announced it will cease shrinking its balance sheet and quantitative tightening, and aims to redirect proceeds from mortgage-backed securities toward monthly Treasury bill purchases.
Okay, thank you so much, Sebastian, for your really interesting report about the large events that have impacted the stock market. So thank you so much. That was really fascinating.
I can go next.
Okay,
Yeah,
great.
but I have a slideshow, but should I send the link to you, or should I just share it
You can
myself?
share it. I think I have
Okay.
enabled sharing.
I don't see it.
Hold on.
Okay. Oh wait, never mind. I see it now. Okay. Um, so this is my financial news report. That's not working. Okay, so first I'm going to be talking about Chipotle, because I really like Chipotle and I thought this would be interesting since a lot of people also know about Chipotle. Basically, what is Chipotle stock has been dropping as much as 20% on this Thursday after the company's quarter three earnings report. And basically what happened is, I think they projected earning as much as 3.03 billion, but they only got about 3 billion. So that's not very good. And the reason why is because there's been a decline in customers. This is since 25-year-olds to 35-year-olds feel like they can't afford eating out as much. So this could be a sign of decreasing economic conditions. And the impact for us is if this like stock doesn't seem to rise soon or like customers don't go back to eating like Chipotle, it could be a sign of decreasing economic conditions. And then my second news is Nexperia chips. This is like um chips for like electronics and stuff, like cars use them a lot. And what's been happening is there's been a standoff between America, China, and the European Union because of this company. Originally, this company was based in the Netherlands, but they have like a factory owned by the Chinese company Wingtech at China. And then in October, the government tries to seize the company again. But this made Beijing like angry, so they said, we're not gonna let any of our products leave China. Like, if you keep threatening to take back like this factory, the impact is without these chips, it's been threatening vehicle production as companies face shortages of these chip maker components. And a little note is also like the US actually blacklisted the Nexperia like company's parent Wingtech. So it's kind of like heightening the conflict between the like political tensions between China and America. And then a little bit of extra info is that I was wondering, since these chips are so basic and inexpensive to make, why isn't America and the UN making its own? So if anyone knows why, or they can like guess why, you can share. Because like these chips are really important too. So why doesn't America just make its own? Why are we like getting them from China? Hello? Is anybody interested in answering? Oh, okay, Vihan, you can go ahead.
I think that maybe the America, I think that maybe America doesn't make it because they don't have enough money to like make it on a large scale, and then there will be too much like demand for it, and then they'll have to shut it down. I don't know
Okay,
why
that
the UN doesn't do it though.
Okay, that's a good answer. That's very like valid. It makes sense. Also another thing is I was talking to my dad about this, and he said that China has like cheap labor too. So labor, like finding people who want to do these jobs could also be a problem for America and the UN. And also because China's already been making all of these things, I feel like we're becoming like, well, like reliant on China making it. So we sort of just don't have like factories for ourselves. And yeah. So that's all I wanted to talk about. It's just like Chipotle and these Nexperia chips. Thank you for listening.
Great, thank you so much, Isabella. Yeah, I think there's also some people in like the chat who have like posted their opinions too. Mm, I think Yeah, so that was a really cool presentation. Thank you so much for like reviewing like Chipotle and like Nexteria, like this chip company. And again, it was really interesting to hear about how um, like big political and like economic events have impacted like the companies. Yeah, yeah, thank you so much. Okay. So thank you, Arav, Sebastian, and Isabella, for your amazing presentations. Um, so for next meeting, we will also need financial news reporters too. So is anyone interested in becoming one? Okay. Okay, I think Arav raised
Yeah,
his.
I could do that.
Okay, Bihan. I think that is that how I pronounce the name? Okay, yeah.
Yeah.
Yeah. Oh yeah, if you Isabella, okay. Wait, I think that's all. Okay, so I have Arav, Vihan, and Isabella as our next financial news reporters. I
Special
think
raise
Sebastian.
a hand.
Actually, if you guys want to raise your hands, could you also like raise it digitally? Sorry, because sometimes it's hard to see. Okay, said he is also interested. And great. So I have Arav, Vihan, Isabella, Sebastian, and Om. Okay, thank you all for your participation. I'm really looking forward to hearing your and seeing your reports. It will be really cool. Okay. So next, let's go to our investment lectures for today. So first of all, I'm going to start off with an investment picture of the month. So take a few minutes to look at this picture and um, s- uh, and
Wait,
see what
Olivia.
you
Olivia,
yeah.
just announced our room. Please open your camera right now. Otherwise, you will be removed from the Zoom meeting.
Sorry. I know a few people mentioned that they don't have cameras. For example, Hanker. Hanker mentioned to me that he was switched to a laptop that there's a camera. So for the other members here, let's ask one by one. For example, Angela Guo, if do you have any restriction that you cannot turn on your camera if possible?
I'm in the car right now.
Oh, okay. Okay, then I think all of the members having turn on the camera. Okay, Angela, yeah, that's fine. Yeah, because I know sometimes in a car you may not have a very good internet. Okay, so you can remain on turn off it. Thank you everyone. I think the reason is that we want to promote communication and interaction during this meeting because we are in everywhere different places. It's always good that you can see each other's face so we can recognize each other. Okay, thank you. Let's continue. Thank you.
Okay. So great. I think pretty much everyone has turned on their cameras. Sorry, that is just like a rule in the Hoperation Fund because we believe that like turning on your cameras like increases like your engagement in like the meeting. And so yeah. So let's continue to our picture of the month. So here are two screenshots of two posts made by a investor. The left one was made around May 2025, and the right one was made a few months later. So take a few minutes to look at these pictures and tell me like maybe what you notice, or like your comments on this, your thoughts.
What's a meme coin?
It's kind of like a cryptocurrency that Except that like it relies mostly on like memes or like people's like on social media like posting about the coin and its like popularity. And many people invest in it to try and get rich quick, because like generally it's like prices will go up really high, and then the owner of the meme coin will like sell the meme coin, and then the price will like go crashing down.
Oh, thank you.
I know it's maybe not like the term that comes up a lot sometimes. Uh, Vihan, do you have another question, or do you want to see something?
I have a question. What in the first post on the left, what does the person mean by fan symbol?
It's basically like your account, like on the meme coin, like on the meme coin app or website, I think. It's basically like your online wallet, I think. Yeah. Okay. So I already see a few comments in the chat. Om says risk isn't always good. Balance risk with reward to not lose all of your money. That's a good point. And Emily's sure to reply, this is bad. That that summarizes it pretty neatly. I'll give you guys a few more minutes to look at this, and then maybe you guys can like unmute to raise your hands and tell me what you
I feel like this person wasn't very wise about like handling risk because risk is like it can sometimes be good, but I feel like when you like put all of your money into it, it's not very wise and you can go into debt really easily.
I agree. That's a nice point. It's important not to mm, like it's important not to like put all of your money into like a single a super risky like, asset, and like sometimes with super high risk isn't that great. Okay, I see a few more comments. Yeah. And Sebastian, do you want something to add? Do you want to add something?
I agree that if you're younger, then you can risk more of your money because you're not using it to like pay like the mortgage or anything. So and like pay for like food. So because like I mean I think your parents probably paid for it. So you can like that's the time that you would probably like want to risk your money if you're going to.
Mm. Yeah, that's a really great point. Yeah, I agree with that. When you're younger, you can definitely um, take on like more risks because you don't have as much responsibilities as when you're older. But like sometimes it's important to like balance that risk. Yeah. And I see some more comments. Om said, don't put all your eggs into one basket. Lauren says, if you use this ambition and put it towards something worthwhile, you could have gone far. Yeah, I agree. So I'm looking the chat, and as like people such as like Sebastian have said, yeah, and there's a lot of opinions on like these two posts, and yeah, these are all really great points. So personally, you can take away many things from this, like the importance of not having too much risk, and don't not putting like all of your money into one investment, etc. So one thing I noticed is like the difference in tone between these two posts just straight off. Like in the first one, he's talking about like how you should like risk everything when you're younger because you don't have that much responsibilities. And then how like even if you lose everything, to not give up. And the second one, a few months later, he like regrets his life decisions and um like how he invested all that money into meme coins. So it's definitely a little ironic and a little like very sad, but also a little almost a little like um funny. So I personally I agree with a few of the statements he makes in his first post, because really when you're younger in like your teens and your early 20s, you really can like afford to invest more and maybe make investments that are riskier. However, though, the key is on investments. Um, here, he's buying like meme coins and he's trying to like get rich quick. But meme coins aren't actual like investments, and he's not investing. It's called gambling, as you can see from his like sentence. The key to success is to risk it all and lose everything. That's kind of a gambling mindset. And when you're actually investing, in my opinion, you shouldn't have that mindset, because, as many legendary investors have said, an investment is something that has value and that can earn you money and that can like earn like cash and like profit for you. However, meme coins though, you're just relying on its like popularity and other people to like buy it and put like hype up the price, and you're trying to sell it at the right time before the price comes crashing down, and that investment doesn't actually have value, and it's not like an actually truly like great investment. Mm. So, in my opinion, you can take away many points from this. You can take away like the importance of like choosing like good investments instead of like and like holding those investments like long term instead of trying to like sell them and get rich quick. Because in like good investments, you should like want to like hold it over the long term so it can earn more and more money for you. Additionally, another thing you can learn from this is to like not take on uh, not buy assets that have a lot of high risks, or not to put all your money into one investment, etc., etc. Right. So next,
Olivia,
yeah.
Sebastian and Aurora and
Oh, sorry.
Arav raised their hands.
Okay. So yeah, I see Sebastian raised his hand first. Sorry, I missed that. I didn't see that. Um, Sebastian, do you have something to say?
Yeah, I definitely don't agree that the key to success is to risk it and then lose everything. Because I mean, I guess eventually, if you keep doing that, eventually you might get lucky and like make some money. But I do not agree that that's just like the key to success.
Yeah, same. And like just from like looking at the first post, like there are some like obvious like flaws in his like logic. Like like investing is great, but like it's important not to like invest in something where like the main purpose is to like risk everything and maybe like hopefully like get rich. Yeah. Arav, yes, do you have something to add?
I see that the first post was made May 2nd, 2025, but when was the second post made?
Mm, oh, I actually forgot. I remember it was a few months there, but I don't exactly remember when it was. I think it was like it was some okay, it was made somewhat recently though. So I think maybe like a few, maybe like in wait, like October-ish, November-ish. Maybe like around October, yeah. Sebastian, do you have something to add?
I'll pass it.
Did this happen during the October 10 crypto massacre?
Yeah, I think so.
Also, it kind of really makes me mad that he took his student loan and deposited into a fan fund and then lost all his money.
Yeah, great point. Yeah, that's actually a really bad life decision. Don't do that in like your actual life. Yeah, I actually didn't notice that much, but when you bring that up, that is a really great point. Like that really is a bad life decision, like to not like use your borrowed money and for your like college and to invest in like a super risky like a super risky like asset. Okay, actually, Jean, um, Dr. Jean just said that she searched up that the second post was made 3 weeks ago. Yeah. So, and so if that answers your question, Orav, the second post was made 3 weeks ago.
Thank you.
Yay. So actually, this scenario is actually something that many people will make. It's actually not that rare because many people do buy like meme coins, and most people like will lose a lot of money in meme coins. So this should just like maybe teach you guys a lesson, like maybe not make some of the life decisions that he made, and to like invest your money like wisely and in like actually good assets.
Didn't like a ton of people lose like all their money on that?
Yeah, like a lot of people.
Yeah, in October.
Because it's very hard to like get out of like um get out of like buying like meme coins or cryptocurrency, because like when you first buy it, like the price goes up and up and up, and many people it's like hard to like know when to stop. I think a few people in the chat earlier, they talked about that. Like I think Hank said he should have cashed out sooner, and Emily agreed. But like a lot of people like if you see your money is going up, you just maybe want to like hold it there for maybe a few more days, a few more weeks, and let it grow. But that's exactly when like the crash comes. So, oh yeah, there's also a Trump coin. Yeah, yeah, I think the Trump coin is also like a kind of meme coin, um, and many of like Trump. A I forgot. I think it's called. I think that's just its name. I think. But it's like I think President Trump he made like a cryptocurrency with his like name on, and then his supporters could like buy it. Yeah. So that was a really like interesting um scenario as you guys just saw, and yeah, all those comments and like opinions were really interesting. So that was really nice. And now I'm going after talking about the picture of the month, now I'm going to talk about a, a technique in investing that is pretty useful. So in in previous meetings, I talked about how to like calculate your how like the compounding and like formulas for like calculating your returns or your money with like with different return rates. So I gave similar questions to this, like if I spend $10,000 in an investment and the annual investment return rate is 5%, after how many years will my $10,000 be doubled? And and um you can use the previous formula I taught you guys to calculate or to calculate n, which is how many years your investment can be doubled, and that is 20,000 is equal to 10,000 times 1 plus 5% to the power of n. And the answer is around 14.2067, but that's a really tedious method. So alternatively, you can use a method to quickly estimate n, and that's called the rule of 72. And before I talk about the rule of 72, I think I see a few more comments, sorry, in the chat. Yeah, I think Dr. Jean and Ohm gave some more information about Trump coin. Yeah. Nice. So going back onto the topic of the rule of 72. So the rule of 72 is a fast estimation of an investment's doubling time given the interest rate. So the doubling time using the rule of 72 can be calculated by 72 divided by the rate of return in percentages. So to answer our question, we can estimate like this. The doubling year is approximately 72 over 5, the rate of return, and that would be equal to 14.4 years. So you can see that's really close. So that's surprisingly close to the actual amount of time it would take. For more examples, you can see this bar, this bar chart here. And you can note that when the interest rate is like really small, like close to 1%, or like really large, close to 100%, the rule of 72 is slightly less accurate. For example, for an interest rate of 1%, the rule of 72 calculates it would take about 72 years to double your money. While the actual number of years is around like 69 or 70. And for an interest rate of 100%, the rule of 72 is also slightly off. But for like interest rates in like the single digits and low double digits, you can see it's surprisingly accurate, or like it has a surprisingly accurate approximation for the actual number of years it would take. So this rule is just to help you to like quickly like mentally calculate the amount of years it might take without having to do like long tedious calculations. Another concept in investing is also the time value of money. So if I asked you guys, would you rather have $1,000 today or $1,000 after 1 year? The answer should be pretty easy. You would rather have $1,000 today because with inflation, $1,000 the next year will not buy as much as today. So a way to calculate like the value of money after a period of time with inflation, you can use the previous formula I introduced a few meetings before. So assuming the inflation rate is 5% per year, then 1,000 goods today will be priced as $1,000 times 1 plus 5%, like the rate of change, and that would be equal to 1,050. So $1,000 today equals 1,050 after 1 year at an inflation rate of 5%. And I'll give you guys a few minutes to look at this. Alright. So the formula then is like the future value is equal to the current value times 1 plus r to the power of n. Where r is the annual growth rate or like inflation rate, and n is the number of years. This formula is like this equation is also it's actually pretty much the exact same as the equation for calculating like your money like the money in your portfolio with like a constant return rate. So this is a formula that is pretty important to remember. Additionally, you can also, if you know the future value, you can also calculate the value previously. So you can solve for the current value and get the second equation. Okay. So now that we know like the rule of 72 and like other equations to calculate the time value of money, now we can continue to our fundamental analysis concepts for today. So in most of you guys like probably know what stocks are, but just in case if some of you guys want like a quick review or like to maybe refresh your memory. So what are stocks? Well, stocks are pieces of companies, and when a company goes public, the owners of the company transfer shares of it to the public in what is called an initial public offering or IPO. So you may like see that term in news articles or financial news reports, and that's just the term to know. After the IPO, the stocks are traded in public. By owning stocks, an investor owns part of the company, including the fortunes of the company. Like if the company does good and has huge profits, the investor will get part of that profits. And if the company does bad, then and like loses money, the investor may also lose money. Additionally, shares of many common stocks will grant shareholders like shareholder rights. So some companies, like I think Berkshire Hathaway, for example, or like Google, they when you buy like a certain amount of their shares, they will give you the right to influence company policies and directions through votes at annual shareholder meetings. Right. So here I listed some assets besides stocks too, like the gold, cash, or like cash equivalents like short-term bonds, real estate, and long-term bonds. And you can see that stocks have generally earned much more than the other assets. So since you know what stocks are, it's also important to know like how to check this basic data. So you can it's really simple. You can just go to Google, type in the search bar the ticker symbol of the stock and then this word stock, and then you will get a lot of information as you can see here. So this can give you Google will give you automatically like show you the returns of the stock for different periods of time, like 1 day, 5 days, 6 months, 1 year, 5 year, etc., as well as the after hour returns. And it will also give you things like the opening price, the highest price, and the lowest price, that like for that period of time. Additionally, at the bottom here, it will give you some other um, like basic but important features, such as the stock's market cap, P ratio, dividend yield, and 52-week highs and lows. So besides those like more basic measures of a company, there are also some basic there are also some like slightly like deeper measures of a company that are important for like analyzing that company. So one popular measure is earnings per share, and this is popularly about like abbreviated as EPS. So earnings per share is one of the most popular growth measures. It is basically what a company earned, like it's a company's earnings divided by the number of stock shares it has. And the bigger the earnings per share, the better, as you can see from the name. If a company's earnings per share increases quarter after quarter at a faster rate, that's called earnings momentum or earnings acceleration. And it is a popular way of identifying solid growth companies. And this is a really important measure of a company. I think Warren Buffett has said many times in like books, interviews, shareholder meetings that one of his favorite measures or like ways to measure a company is looking at its earnings per share over time. So how do you find earnings per share? Well, just by searching it up on Google, sometimes it's hard to find it. So you can go to some websites. For example, one of my favorite websites is Finviz. And if you go to Finviz and you go into the search bar, you can type a stock's ticker symbol, and it will automatically give you a lot of data on the stock. So it will give you like a gigantic bar of data, like over here. And here you can find the earnings per share, which is often abbreviated just to EPS. Another key measure is the price to earnings ratio or PE ratio. And this is pretty much like the king of value measures. It's calculated by dividing the price of a stock by its earnings per share. There's also variations on the PE ratio, like trailing PE, which is like the PE ratio, but using earnings from the past 12 months, as well as forward PE ratio, which is a PE ratio using the predicted earnings in the next 12 months. The P ratio, though, like basically tells you how much you're paying for a company's earning power. So if the PE is high, that means you're paying extra money for a stock. And therefore, if the PE is high, you should expect to get like really high earnings growth to like make up for the extra money or like premium you paid. It's riskier though to invest in like a high P stock than a low P stock because higher P stocks often have like high earnings expectations, and it's often difficult for it's more difficult for those companies to meet those high expectations. So sometimes like shareholders will more easily be like disappointed and might like sell the stock. Mm. One thing to note about the P ratio, though, is that it's more suitable for comparing companies in traditional industries. So many growth companies will have like super high P ratios, um, like Apple, Amazon, Nvidia. Those companies will have really high P ratios, and for many growth companies, the P ratio doesn't matter that much, so it's not a very good way to evaluate those companies. And the P ratio is overall more suitable for comparing companies in traditional industries. Additionally, different stocks, different industries will have different like average P ratios and different standards. So they will stocks in like different industries may sometimes have like vastly different P ratios. For example, just taking that example I talked about earlier, growth many like companies in like the tech industry, which is like a big growth industry, have very high, um, sometimes unrealistically high P ratios. But companies in industries such as energy or um, like consumer staples or like banking will have much lower P ratios. So therefore, therefore the P ratio um, isn't the best for comparing companies in different industries. However, they can be used to compare different companies in the same industry. I think, yeah, Vihan said that Tesla's P ratio is like 250 exactly. So the P ratios of different companies will vary definitely depending on what area they are. So it's it's important to note that it's more effective to use the P ratio to compare companies in the same industry, as with other measures. So just to give you guys some hands-on experience, I have an activity for you guys. So from so go to finvest.com and you can check the P ratios of these four companies in the consumer staples sector. Coca-Cola, Pepsi, Procter and Gamble, and Colgate and Palmolive. And like tell me once you find their P ratios, like which one is the cheapest, which one is the most expensive, maybe which one might you buy? Let's see like how fast you guys can do this. Yeah, I would really encourage you guys to like try this activity just to get some like experience like searching up different companies. And I also recommend that website Finvest too. It's great for like getting information on stocks. Hmm. Some other websites I recommend too are like stock analysis. That's really good for like getting stocks like statistics, key measures, uh, and like its financial statements, etc. I see some responses already. I think Lauren said that Colgate is the least at 21.9. Nice, that was fast, Lauren. Vihan, yeah, I said, and Hank says Pepsi has the highest with 27.79. Great. So that's just a fun activity to so you guys like know what searching up stocks is like. Wait, I think Arav said Coke is the least with 20.7. Okay. Interesting. Well, I guess you guys can check that then. Okay, so I see there's some conflicting data. Wait. Okay, so apparently Coke has both a 20.17, 23.3, and 22.81 P ratio. So, oh yeah, I think Sebastian says he has to go. Okay, bye, Sebastian. Thank you so much for your financial news report today. Mm. Anyways, since I see time is running short, I think we can go on to our next activity too. That was interesting though. I didn't think there would be conflicting data on the Coca-Cola P ratio. I think I'll search it up later. Mm, okay, and finally, third metric I want to talk about today is the price to book ratio or the PB ratio. And you guys may have seen this too. Mm, too. So the PB ratio compares a stock's price with how much the stock is worth right now if someone liquidated the company. It's like them like liquidating a company means like sell all of like the company's like assets. So if your PB is less than 1, that means you're paying less for the stock than its liquidation value. And that's very good because it means that no matter what, even if the company goes bankrupt and has to like sell everything that it owns, at least you will make a profit. However, note that that's a very, very rare PB ratio. Most companies don't have PB ratios less than 1. Mm. And if you do find a company that has a PB ratio less than 1, um, sometimes it may be worth like taking it with a grain of salt because some companies um can sometimes like fake their P can sometimes like fake their liquidation values to like increase their PB ratio. Nevertheless, though, the PB ratio is an important factor when evaluating stocks in some industries, such as banks. Mm. So here is my next activity for you guys. From finviz.com, check the PB ratios of these 4 banks. Citi, JP Morgan, Goldman Sachs, and PNC Financial Services. And tell me, in terms of PB, which one is the cheapest and which one is the most expensive? Okay, I think Vihan already has a response. City is the cheapest.
I already had my tabs open, so I just put the letters in as quick as I could.
Okay, great. And I see others have also added that. Okay. So which one is the do you guys know? Okay. JP Morgan is the most expensive. That is 2.24 for JP Morgan. So the PV ratio is a pretty important metric for evaluating like banks. Oh, cities is 0.93. Okay, that's a really good PB ratio because that means like even if city goes bankrupt and sells off the assets that they have, um, that will still be higher than the current price you're paying. The current price you're paying. That's really interesting. it's maybe also worthwhile to after this meeting to maybe investigate those stocks a little. And you can also use like the website Finviz to look at other stocks. And it's great to do some research now and then. Okay, so seeing as our time is mostly up, I will skip the part about volatility of stocks and I will leave it for next meeting. So a final announcement I would like to make is that this year we will be establishing multiple most contribution awards to recognize members who make outstanding contributions to the Hoperation Fund. So that's just like a fun award you can maybe look forward to. And some outstanding contributions include providing valuable suggestions to improve the Hoperation Fund, maybe like making flyers, improving the website, um, creating social media posts, or like thinking up like um great suggestions, like or activities for fundraising. And other outstanding contributions include making contributions to like fundraise to our fundraising, investment, charity, educational activities and events, and really anything that can enhance like the Hoperation Fund's impact on the world. So at the end of July 2026, so this school year, I and all of the other advisors will vote to select the award recipients, and each award will include a trophy and a valuable investment book. Okay, so that's it for today for this month's meeting. If you guys think the Hoperation Fund meetings are really helpful to you and you really enjoy being in the Hoperation Fund, please introduce us to like your friends, maybe family members, etc. So thank you all for coming. Does anyone have any questions? Yeah, Bihan?
If you have a suggestion where to be like put it,
Oh, sorry. I think my internet connection is a little bad. Could you repeat that? Sorry.
if you have a suggestion for a
Oh,
fundraiser or something, where would be put it?
oh. If you have a suggestion, please don't hesitate to email me. Or at the end of like some monthly meetings, you could also like tell me about the suggestions, and maybe we can arrange like maybe like a quick meeting outside to discuss that. Mm. Or you could if you have like a suggestion and it's still pretty far away from our monthly meetings, you definitely just straight out email me and hopefully I will respond pretty quickly.
Okay.
That's something to like to note if between like our next meeting and now you have any suggestions, again, I would really love to hear them and please tell me them. And yeah. So does anyone, that's a great question, Bihan. Does anyone else have any other questions? Okay, Vihan, I think you said in the chat that you have one suggestion. Yeah, sure. You can just tell me that right now.
Like maybe um we can do a bake sale. Anybody could do a bake sale, and like whatever money they can get from there, they can just donate it to the fund.
Okay, interesting. So where would you suggest having the break sale? I think our members are mainly spread out in like a few different areas. We have a lot of members in like the DFW area in Texas and like North Texas. But we may also have some like other members in other states. So I think it's important like where we like host our bake sales. So, oh yeah, Vihan, what area are you based in?
The northwest side of America.
Okay, so like California, it's around like that area.
Yeah, Washington State.
Oh, Washington. Oh, nice. So a bake sale is an idea. Mm, I don't know if there are any other members in the Washington area that maybe you could host a bake sale with, or we could do in the DFW area though. Um, oh yeah, if any of you guys in the DFW area where I'm based in have any like suggestions for like where to put like a venue for a bake sale, please tell them to me because that's an interesting idea though. Thank you, Bihan. But again, it would be like we would need to like think like where to host a bake sale. We could definitely do it in your area or like I think there's like more members in the DFW area in North Texas, so we could do that there. But then we would have to find like a venue or like a place to host that bake sale. Yeah, thank you.
Some of my friends from school, I think some of my friends from school would probably want to help me with a bake sale if I do it, so I could maybe do it with them.
Okay, that's amazing. If you have friends, definitely, you guys can do a bake sale together. That would be that's a great idea. Mm. Mm. But yeah, Bjorn, if you have, Bjorn, after this meeting, email me with your idea and maybe we can discuss that more. Uh, so does anyone else have any questions or things they would like to add? Okay, in that case, then that's the end of this month's meeting. Thank you all for coming and see you next month. Bye.
Thank you. Bye.
Thank you.